long-term capital gains or short-term capital gains tax, TDS or service tax, tax exemptions, penalties. If you have any tax query related to real estate, you've come to the right channel. Very, very warm welcome to Magicbricks Now. This is Property Hotline, the show that answers all your real estate queries. I'm Kavita Krishnan. Our special guest today is Ashish Sodhani. Now, Ashish is Associate International Tax Practice at Nishith Desai Associates. Ashish, thank you very much for coming in. Let's get started with the website query. Hussein wants to know that if buyers, whether buyers must pay service tax on under construction properties. If not, what should buyers do if they've already partially paid the service tax? How can buyers get a refund of that amount? You know, to Hussein's question, I'll add one question of my own, and this is something that a lot of buyers write to us about also, which is that when they buy under construction property and they're making payments in tranches, then the service tax payment also, the developer asks them to deduct service tax in tranches. So they're paying that every time they make an installment. Is that also necessary?
Right. So coming to the first part of the question, what Hussein asked. So service tax is chargeable when you are receiving certain services, right? In case of a under construction property, there are two things that you are getting. You are getting the property itself, and you are also going to get the services that the builder, the developer is rendering for constructing the property. So therefore, therefore it is not right for the builder to ask you for service tax on the full property value. Therefore, to solve this anomaly, the government came up with an abatement rule. Under these abatement rules, all you need to do is that you need to calculate what is the total area of your flat, or if it is less than 1 crore or more than 1 crore. If it is less than 2000 square feet and less than 1 crore, then you can pay only 75% of its abated, and 25% is the remaining part on which you will need to pay service tax on. So that comes out to approximately 3.75% of the total amount of your purchase price is on what you will be paying service tax. If the flat area is more than 2000 square feet and it is costing more than 1 crore, then in that case the rate is slightly higher, where the abatement is 70% and you have to pay service tax on 30% of the remaining value, which comes out to approximately 4.5% of the total purchase price. Regarding the query with respect to service tax, payment of extra service tax, so then an application will need to be filed. This can be done online. Preferably, you should go to your service tax consultant to do this. Once you have made the filing, you should be able to get the refund for the amount. With respect to the third query, service tax, yes, service tax should be paid in parts, in installments, as in when you are making the payment. So that way you are also making the payment as per the amount of work that the constructor is doing for you.
So tell me this, Ashish, would that mean that I have to pay whatever it is, 3.5 or 4.5%, you know, depending on the cost of my property? So I have to pay this on every installment that I pay to the developer. Is that what you're saying?
No. So let's take, for example, if the property costs 1 lakh rupees, total purchase price is 1 lakh. Let's divide it, and 30%. So you would be paying 3.75% on the 1 lakh rupees. That comes out to approximately 3,750. That amount will be divided into the number of installments you are going to pay. So if you're paying 10 installments, then 375 rupees will be added to each amount of installment that you will be paying to the developer.
Right. So if you are buying an under construction property and you are making payment in tranches, then do remember that you have to deduct service tax on every tranche, on every payment that you are making to the developer. Do keep a record of it, but you need not really worry, because service tax, the developer also has to pay off this tax to the government. This money goes to the government, it is not going to the developer's pockets. So chances of you being fooled over there are really very low. Email query next. Peter Mark has a 4-part question. Now he wants to know if the municipal corporation or the Gram Panchayat can charge property tax until the OC or the CC is issued. And if this property tax is charged, okay, let's take it in parts, I think, since he said it's a 4-part question.
Sure.
So can they charge property tax?
Yes, they can charge property tax. Just to give a small snippet about property tax varies from state to state. So every state makes its own rules. In case of Maharashtra, yes, the Gram Panchayat or the municipal corporation can charge service tax.
So they can charge the property tax without issuing an OC or CC. So if this is charged before issuing the OC, he wants to know who will bear the tax, the builder or the buyer.
So first of all, when can it be charged? It can be charged at any time when the building becomes or the flat becomes livable. When you have the possession of the flat, when it becomes when you can make possession of it and start living in it, you have to start paying property tax. Technically, everything till you have started living should be paid by the builder, but once you have received the flat, it is your flat and therefore you should be the one paying the property tax.
Which means you will have to, as a buyer, you will have to start paying property tax once you get the OC for that property, once the OC is, has been granted and once you have got possession of that particular project, right?
Right. So at times we have seen that the OC is not very timely available, but you still start living in the flat because it is ready for you to start living in, and therefore the way property tax works, and there are judgments saying this, that it can be levied as soon as you start living in the flat and not necessarily when the OC is issued to you.
Right. His next question is, from what date will property tax be charged? Date of possession, OC date or purchase deed date? Which you just answered.
Right.
Essentially, you will have to start paying from the day that you start living in that particular property. Can the municipal corporation or the Gram Panchayat charge property tax on under construction property? And that's an interesting question.
So usually on under construction property, property tax is not levied. It is only once the property is ready, the property tax is levied.
So property tax is payable on ready property and you have to start paying that once you move into that property. Moving on, we have our first caller of the evening. Neha has dialed in from Kolkata. Neha, how can we help you?
Yeah, actually, we sold a property in March 2016. It was a residential property. And however, the possession letter we received in January 2016. But it was an under construction property for which the initial payment was made in January 2012. My first question is whether it will qualify for long-term or short-term capital gain. My second question is, we are also planning to buy another residential property. And so we need to invest whether the entire sales proceeds or only the capital gains to claim the exemption benefit. And my third question is, we are also planning to get a housing loan for the new property. And now suppose if we gain in the property rupees 20 lakhs and if we take a loan of rupees 20 lakhs and if we invest only rupees 20 lakhs in the new property, will we get the exemption benefit?
So you're taking a housing loan over and above the gains that you have made and you want to know whether you can still claim benefit.
Right.
Okay. So let's take her question in parts, Ashish. First, she said that she bought property in Jan 2012, got possession in Jan 2016. She moved in March 2016 is when she sold it, in fact. So clearly 4 years over there. Does this would, I'm guessing, qualify for long-term capital gains?
So we wish it would qualify, but the stand that the department takes is that it is from the time when you have actually got possession of the property is when you will be the property has actually come into your hands, and therefore that will be the period of holding will be calculated from the date on which you actually got possession of the property from till the date you sold the property.
So under construction period doesn't qualify, Neha.
Yes.
If you are looking at capital gains, that is calculated from the day you get possession, which means since here you got it in Jan 2016 and you sold it in March 2016, it will actually be taxed according to short-term capital gains tax, and that would be taxed at
30%.
30%. So that also kind of the other questions that she asked about reinvesting gains, all of that really falls through, because there is no way that you can actually get out of paying the short-term capital gains tax, right?
No, so if she uses that gain amount to purchase another residential property, then she can offset the capital gains tax that she is going to be paying for that. With respect to the question that she had with respect to consideration amount or the capital gain amount, you can invest the capital gain amount into the new flat because that is the amount on which you are going to be paying taxes on, and therefore that will become exempt if you put it on a residential flat again.
So essentially what he's trying to tell you is, say you bought the flat for 20 lakhs and you sold it for 50 lakhs, you made a gain, that is a profit of 30 lakh rupees. That 30 lakh rupees needs to be reinvested in another residential property. It's only then that you can actually claim exemption from capital gains tax, right? And what if she takes a home loan?
she can take a home loan. That's fine, because the gain amount is going to be calculated separately from the loan that you are taking. So the loan amount can also be used, and the gain amount can be used to pay the loan. That's fine. It's all actually going towards purchasing of a residential property.
The only thing, Neha, that you need to ensure over here is that your entire capital gains component has been, entire gains, that is a 30 lakh rupees, if you go by the example that I gave you, then that has to be completely reinvested in the new flat that you're buying. Okay. Moving on, we have Vivek Seth now, who's dialed in from Delhi. Vivek, how can we help you?
Yeah, I have a question regarding property which I inherited a couple of months ago, and this is basically a residential property which was built by my father more than 60 years ago.
Okay.
Now, if we were to sell that property today, and the sale proceeds were to be divided between my brother and myself, and if I were not to invest into a new property, will I be paying any capital gain tax on this? Because the property is more than 60 years of age, in terms of construction. So I get different opinions around that. Some people say I would not be paying any capital gain tax because this is beyond 32 years of age, the property.
Right, Vivek, let's get you an expert opinion on that now. Ashish, he's trying to sell ancestral property over here, which is over 60 years old. Does he have to pay capital gains?
Sure. My view is that you will need to pay capital gains. And the point over here is that you will not calculate the cost of acquisition with respect to at the price at which you got it, but at the price at which your father constructed the property. From that date, you will add the indexed cost into the acquisition price, and then whatever the consideration is subtracted from the consideration, and that amount will be a capital gains amount.
Okay, so there was a whole lot of theory over here. If you could just break it down for us. What is indexation price? Now, how does he get hold of it?
Sure. So, it's been 60 years since the flat was constructed, so money has depreciated over that period of time, and therefore that needs to be factored in to calculate the exact cost of acquisition as that would have been today. Therefore, the cost of acquisition would be multiplied by that relevant number that is available on the income tax website. The formula also is available. The formula can be put in, and you can get the cost of acquisition of the flat as it stands today. Then subtract the consideration amount from it. Whatever remains should be the capital gains.
Right. So Vivek, that's what you need to do. But the sum and substance is, yes, you have to pay capital gains tax on it. And if you really want an easy way out to calculate it, then the best thing to do is to go and consult, go get a tax consultant to do it for you. Right. Moving on, we have a website query next. Vijay has written in and says that he bought an under construction flat in August 2014. He's yet to get possession of this flat. The flat costs 30 lakh rupees. Now he wants to know how much TDS he must deduct on all his payments to the builder.
Right. So for TDS becoming applicable, the threshold that the Income Tax Act provides is for 50 lakhs. If your property is less than 50 lakhs, then there is no requirement to withhold any taxes. Considering your property is worth 30 lakhs, there should not be any requirement to withhold taxes. You can make the full payment to the builder.
Right, Vijay, that should bring you some cheer. No taxes over there for you. Abhaynath Singh has dialed in from Thane. Abhaynath Singh, how can we help you?
Hello. Hello.
Abhay, yes, Abhay, how can we help you? आवाज आ रही है आपको?
Yeah, madam, I got two granddaughters, my elder daughter's daughters.
Abhay, अगर आपका टीवी चालू है, if your TV set is switched on, could you mute it?
Hello.
Yeah, we can hear you.
I have got two granddaughters, my elder daughter's daughter. Hello.
Yes.
So
Tell us.
I want to take insurance LIC policy. Whether I can pay premium from my own account and claim deduction on ATC.
Okay, can he take a life insurance policy for his granddaughters, pay premium from his account?
Yes, I pay from my income, grandfather, and claim ATC benefit under LIC.
Can he claim tax benefit if he pays insurance premium from his account for his granddaughter?
Right. So the deduction amount is 1.5 lakh rupees, just to let everybody know. Whether the deduction is available for your relatives. So ATC allows for a very short definition of relative, wherein your either you yourself or your spouse or your children are allowed, wherein you make the payment on behalf of them and take the deduction. In this case, since it is your granddaughter, it may not be possible for you to take the deduction from your income.
May not be possible to take the deduction from your income, but if he were to take it in his daughter's name, he would be able to claim tax deduction. Right, Abhay?
Right.
Hope that answers your query. Now, we have an email query coming in next. Chandra says that her mom sold her house to her sister, that is Chandra's aunt. Now, the aunt has given Chandra her share through a check. Does Chandra have to pay tax on that?
So, as I understand, your aunt has paid the amount to your mother here, and therefore, to the extent that the consideration amount is more than the cost of acquisition, yes, there should be a tax impact here.
There should be a tax impact over here. But she says that it is Chandra's share. It is not her mother's share.
Sorry, okay. In case of it is Chandra's share, then it would be assumed as if you have first given this property that you own to your mother, and from there it has moved from your mother to your aunt, and therefore to that extent, whatever the cost of acquisition would it be for you when you give it to your mother, that should be the cost of acquisition for you, and any consideration amount received over and above that should be subject to tax in your hands.
So in any case, she will have to pay tax.
Right.
Though essentially what her aunt has done is just given her a rightful share of the
Absolutely.
property's proceeds.
Yes.
So Chandra, yes, you will have to pay tax on that. How will this be taxed? At how much percent will she have
So
to
it would
pay?
depend upon whether it is a long term or a short term. If it is long term, it would be 20%. If it is short term, it would be 30%. However, if we consider that the property has moved from one hand to the other, the period of holding resets itself and it goes back to the person whom I have sold it to, and therefore it may be that this case there would be a short term.
So most probably it would be a short term, but Chandra, since it is quite a complicated transaction that you're speaking of, the best thing would be to get an expert consultant to go through all those papers and tell you exactly what you will have to do. But yes, you will have to pay tax on that transaction. Website query next. Deepak Vadiala says that he plans to buy a flat in Hyderabad. Now it's a 1,000 square feet flat, costs less than 1 crore rupees. The builder is also charging service tax at 4.5% for him. He wants to know if this rate is correct. He also asks what basis should the service tax be calculated on, only the work order or the sale agreement value. He also wants to know the difference between service tax and VAT. Now this is a very interesting query, and because especially in Hyderabad where he writes from, buyers actually sign two contracts. So it's a works contract and a sale deed,
right,
or an apartment deed, so to say. So how do you calculate service tax?
So in this case, as I said earlier in the show, that the rate depends upon what the value of the flat is and what the square feet is. In this case, the value of the flat is less than 1 crores and the square feet is also less than 2,000. Therefore, he should be eligible to get the lower service tax rate, that is the 3.75 and not the 4.5 as what he states over here. The second part of the query is what should be at what price should it be calculated? It should be calculated on the total purchase price. The 3.75 should be applicable on the total purchase price. With respect to the third query, what is the difference between service tax and VAT? Now, service tax is charged when you are receiving certain services. When somebody is providing you services and you are receiving them, there is a service tax component. VAT is charged on movable goods. When one movable good is given to you, there is a VAT element on it. In your case, since this is a ready flat, there should neither be service. If it is a ready flat, there should neither be service tax or VAT, because VAT is not applicable on immovable property. However, VAT laws are defined from state to state because it's a state levy. So we will look at state law specifically, but generally VAT should not be applicable on immovable property.
You know, Ashish, he's not clarified whether this is ready property or under construction property, unfortunately. So we can't give him an answer on that. But yes, you will qualify for the lower end of the service tax bracket, which is 3.75%. So if the developer is asking you to pay 4.5%, then obviously there is something wrong over there, and you should probably go back and talk to the developer and ask him what is the case. The other thing that he wanted to know is the difference between the work order and the sale agreement. Like we discussed earlier, Hyderabad, you signed 2 agreements. So what is the service tax actually calculated on? So
the service tax will be calculated on the total purchase price that you are going to pay to the builder. The VAT, however, will be calculated. Maybe it is a under construction property. In that case, you will only pay VAT on the cost of the materials and the cost of any furniture or fixture that is being set up by you in your flat. That is the amount on which you will be paying VAT, and not on the price of the property or price of the flat that you are actually getting. That is the distinction.
When you said when you say that on the total property consideration, does this mean the sale agreement value or the works contract?
Because the sale agreement value.
I mean, if you go by what service tax means, and you did explain it earlier in the show, that service tax is essentially tax that you're paying for any services that have been rendered to you.
Right.
So in this particular, I mean, when you're talking about real estate, it is essentially the act of building that property. And we are assuming that it's an under construction project over here.
Right.
So when you are signing a separate work order, why would I then have to pay service tax on the sale agreement?
So we'll have to look at what the works contract is for. If the works contract is for only carrying out work under your flat and constructing the flat, then the service tax component should be applicable only on the works contract amount. However, if there is no distinction as such between the works contract or the sale deed and the price is cumulative, then the total purchase price is what should be taken into account.
So right, so that is something that you will need to really check. Deepak, you will have to go through your agreement in detail and see if there are two different amounts that are specified, one for the works contract and one for the sale agreement, in which case theoretically you only pay service tax on the works contract because you're paying tax on the services rendered and not on the sale agreement. So I'm hoping that is a lower amount and you end up paying lesser tax over there. Before we move on to the next question, Ashish, I wanted to bring you in on that recent Delhi High Court judgment. Now, a lot of people have been calling us and asking us whether they should just stop paying service tax after that particular judgment, because the Delhi High Court order clearly said that the tax department has not got its math right. The calculation is all wrong because they are asking you to pay tax on the entire value of the property when that in fact includes much more than mere cost of construction. So what should people do? People who are buying their homes at this point in time, should they pay it? Is it even applicable to cities outside of Delhi?
So my suggestion would be to pay it at the moment. As you said, whether it would be applicable to cities outside Delhi, there is a sub judice over here that becomes applicable. And therefore, while we do not have a clear judgment from the Supreme Court, it would make sense to pay this amount. I agree that the 75% and the 70% abatement is a very strange number that the government has come out with. But at the moment, the law stands as it stands, and therefore we must end up paying it. If the Supreme Court comes out with something, it is only then can we consider it to be law of the land.
So essentially, home buyers need to wait for somebody to go in appeal to the Supreme Court, for the Supreme Court to take it up and actually come out and come up with an order on it. Also, the Delhi High Court order very clearly says that it's up to the government to legislate and make the necessary changes. So that's again something that you need to really look out for and wait for. From our end, we can promise you this on Magicbricks Now. If there is any development in this regard, we will definitely let you know about this. However, for the time being, you should pay that service tax so that you don't end up paying a very hefty penalty later on. Also, can I pay the service tax under protest? This is something that I've been reading somewhere, that we can also do that.
Sure, I mean, it does not debar me from paying it under protest, but we must also consider the consequences before we do something like that, because if it comes under scrutiny, then you should be answerable and you should have a fair argument to make. It should not be the case that the Supreme Court, does not uphold the judgment of the Delhi High Court, wherein whatever you are trying to do over here will not work out very well.
Okay. So the safe thing to do is pay off that service tax, and if the Supreme Court rules in your favor, in the sense that upholds the High Court judgment, then that's a loss that you've made. That's all we can say. Website query next. Kumar says that he owns two properties. Now, one is ready property, the other is under construction. He plans to sell the ready property. He wants to repay the loan on the under construction property using the gains from the sale. Will he then have to pay capital gains tax?
Sure. So, first of all, when we make a gain, we can use that gain to purchase another residential property. In this case, he has a residential property which he is selling, and he has another property which he has already bought but is under construction, right? And you are given a period of 1 year before and 2 years later or 3 years to construct the property that you want to use the capital gains amount for. In this case, since you have already made the purchase of the under construction property, the capital gains benefit that you could have taken should not be available to you.
So it will not be available to you because you're already paying money for this particular under construction property. You have to reinvest this in a completely new property. Only then can you actually claim a capital gains exemption. That's it on today's episode of Property Hotline. Ashish Sodhani, thank you very much for coming in, for answering all those questions. And if you have any queries related to real estate, do get in touch with us. We'll get the country's top experts to answer each and every one of them. That's a promise. IDs flashing on your screen. Send in those questions. Thank you very much for tuning in.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.